Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the daily chart with the bullish scenario where we are looking for a 5-wave impulsive structure to the upside, where the most common target for wave 5 is between the 1.236 and the 1.618 taken from the high to the low of wave 4. This wave 4 retraced to the 382 to the 05 taken from the low of 2 to the high of wave 3, which is a common target for a wave 4, and also this wave 4 ended right on top of the 2 fib time taken from the start to the end of 2 to the high of wave 3, which is also a very nice target for wave 4. If we then zoom in to this wave 5 to the upside, we are looking for an impulsive structure to the upside. The green count here is the higher degree Elliott wave count, where we are then looking for wave 1, 2, 3, 4, 5, and this green wave 5 then ends the yellow wave 5, and then we expect a bigger corrective structure to the downside. Inside this wave 3, however, we also want to see a 5-wave impulsive structure, which is then the blue count over here. For a wave 4, the common target is the 0.236 to the 0.5 taken from the low of 2 to the high of this wave 3 here, giving you a target area between 48.5k and 46.3k, with the invalidation being the 0.618 at 45.3k. What is important is that a wave 4 of a higher degree, in this case the blue count, likes to retrace to wave 4s of a lower degree, because inside this blue wave 3 we can of course count another 5-wave structure to the upside. These waves here are then wave 4s, and a wave 4 of a higher degree likes to retrace to these wave 4s over here, but you don't really like to see price moving below them over here, so going to the 0.5 would not really be that bullish. In this scenario, we of course want to see a corrective structure inside this wave 4 and not continuation to the downside. So on the lower time frames, currently what we are looking for in this scenario is a wave A, B, and then a wave C towards the downside in 5 waves, 1, 2, 3, 4, 5. However, if this is the end of your ABC and we are looking for bullish continuation to the upside, we need to look for 3 structures, either an impulse in a 1, 2, 3, 4, 5, a diagonal in a 1, 2, 3, 4, 5 diagonal structure, then a move down and continuation up, or a double 1, 2 and then an explosive wave 3 towards the upside. If we look at these 3 options, then for an impulse we have overlap over here between the pivots that you can see for potential 1, 2, 3, 4, 5, and overlap is not allowed in an impulsive structure. So then we have to look for a diagonal where overlap is allowed, but if we look at a diagonal, you can see the trend lines are expanding. And an expanding diagonal is a lot less common compared to a contracting diagonal, lowering the probabilities for this to be a diagonal. Besides, wave 2 versus wave 4 is very out of sync, right? Wave 4 is extremely long compared to this wave 4 for a diagonal structure. Finally, if we look at a double 1, 2, your first wave 2 here retraced to the 0.382, which is a less common target for a wave 2, and the second wave 2 here is very long compared to your first wave 2. And when we think about a double or even triple 1, 2, then preferably your first wave 2 is the biggest 1, 2, and then the next 1, 2s are actually shorter in time and price. However, that is not the case, because if this is a second wave 2 and then a wave 1, 2, 1, 2, 3 to the upside, this wave 2 is much longer, lowering the probabilities that this structure to the upside here is either an impulse, a diagonal, or a double 1, 2, increasing the probabilities that it is a corrective structure to the upside. Now this then translates into this WXY or ABC scenario, where in a WXY we have a zigzag to the downside. In a W we are looking for a wave X and then eventually a wave Y to the downside. Now because wave W is a zigzag, the probabilities increase for a wave Y to either be a flat structure itself or a triangle, and in a flat scenario we are looking for a zigzag in A, either a zigzag or double zigzag in a wave B, that is most common, where the common target for B is between the 1.236 and the 1.38 taken from the high to the low of wave A, giving you a target area between 50.9k and 51.2k. Now that is quite interesting because it is in confluence with the resistance box that we have above price here, 50.7k to 51k as you can see. And for wave X we have some confluence above price as well, in confluence with the 786 taken from the high to the low here, which is between 49.9k and 50.1k. In a flat structure though, after a wave B, you would be looking for an impulsive wave C towards the downside, preferably taking the low of this wave A. In the bearish scenario on the higher time frame, we are looking for a flat structure. So here on the daily, we're then looking for a 3-wave A, 3-wave B, 5-wave C towards the downside. Most common target for your wave B is between the 1.236 and the 1.38, taken from the high to the low of A, giving you a target area between 51.6K and 53.1K. Currently, price is ranging around the 105, which is a less common target for an expanding flat structure. Now, in an expanding flat, wave B has to be a 3-wave structure to the upside, so then we have to look for an ABC. Here you can see the common target area for a wave C between the 1 and the 1.236 is most common. However, the 1.618 is also pretty much still a common target, not gonna lie. So 47.6K to 51K is definitely an area of interest, and we know from experience, also locally here, that a wave C can be very, very long. This wave C in an ABC to the downside here went to the 3.618 trend-based fib extension, and this one here locally, which has a higher probability of being an ABC here, went to the 2.618. So I have the 1.618 on my chart, but a wave C can extend to higher prices. Now, if you then look at the micro bearish scenario, if this is the high of your wave C and you're going to be looking for an impulsive structure to the downside, right, in a bigger flat, because we're looking for a 335. So if the high of your C here is in and we are looking for impulsive continuation to the downside, then we zoom in to the 15-minute. And then what I mentioned yesterday during the live stream over here, right, was the 0.618. And if price moves up and hits the 0.618, probabilities are lower for this to be an impulsive structure to the downside. Reason is we wanted to see at least one more low for a 5 and another for 5 in blue. So what we were looking for here was a wave 1, 2, 1, 2, 3, 4, 5, 4, 5, at least one more low preferably. However, price moved towards the upside, right? Decreasing the probabilities that this is an impulse to the downside, because for the blue wave 4 here, hitting the 0.618 taken from the high to the low here is an invalidation. So therefore, the probabilities for this particular scenario are lower. Therefore, the probabilities are higher for price to take this high sooner or later. When we look at the different confluences around price, we have the resistance over here being the daily at 49.9K, which is one of the confluences in this resistance box that I mentioned earlier. We also have the point of control of this range over here at the same level. So that is the first area of resistance. Then the second area of resistance up here, I already mentioned. Below price, we have a fresh daily naked point of control at 49175. The value area high of the previous range, this dark blue line here, reacted as support, or was support over here, which was very, very nice indeed. And the point of control of the range is not yet touched, so that is still support, as well as this 1 hour order block. That's the white box here. And then we have a daily naked point of control at 47325. If we look at the CVD divergences, then we have over here a bearish CVD divergence, but also more locally the bullish one. The bullish CVD divergence in this scenario has a higher probability of playing out because it is on the right side of the most recent low. Both of the pivots over here are on the right side. That's what you prefer to see. So this one has a lower probability compared to the one on the right. Now the target for this bullish CVD divergence is price taking this high, which it almost has done over here. And for this bearish CVD divergence here, the target would be this low. But let's just wait and see how price is going to react if it hits this resistance over here. So if we then look at the probabilities of the different scenarios, then on the daily chart, currently the probabilities are higher to finish a wave 5 to the upside. On the 4-hour chart, probabilities are higher for an impulsive structure to the upside, where we could be looking for a wave 4 in a WXY or an ABC, which is then also what I write on the micro here, where currently the probabilities are higher that this is an ABC structure to the downside, which then leads into a WXY or a potential flat structure here, WXY or an ABC, just because the probabilities aren't yet that high that this is an impulsive structure to the upside because of what I explained. So then a continuation of the range would have a higher probability, but generally we are expecting this high to be taken sooner or later. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.